If you have questions, concerns, and are just lost when it comes to planning for retirement, meet Steve Hoyle and Derek Caldwell of the Hoyle Financial Group. You know, anytime I hear the phrase, "Hey, boomer," it's usually followed by something snarky written by some millennial out there. However, these headlines intrigued me. Listen to this. "Hey, boomer, you're addicted to stocks." The article said that the boomer generation has had a lot of success with stocks, which is great, and of course the market as they enter retirement, but they're having a hard time divesting themselves of risk. So they're addicted to growth. It's kind of like sitting at the casino table way too long, hedging your bets, and then what happens when you risk it all and you lose it all? What are your thoughts on this?
Well, I just think, Derek and Jess, it's all about 2008. The market went up for years, and then boom. What do you think, Derek?
From 2008 to COVID, the 2020, you could have put on a blindfold and just had a dartboard full of stocks, and you would have made money. I mean,
Absolutely.
really, there was. I mean, it grew so much in that period of time, and even 2020, the market rebounded so quickly, and 2022 was our first kind of taste of volatility. So, for the last 15 to 20 years, there hasn't been a ton of volatility, and especially younger people, I see that a lot. And that boomer generation was kind of when they had money to invest. And they just started throwing it in the market, and they were just making money hand over fist. And no one wants to get off the merry-go-round. Nobody wants to look at anything as long as it's doing money. And that's what kind of tie into what we just talked about. The calls we got were complete panic because people didn't know what to do. And that's not the feeling you need to have. And you can't sit there and go, okay, well, only when it drops a lot will I get Derek and Steve involved. I'm doing fine right now. I'm just going to put it off because I'll tell you right now, before you retire, there will be multiple market crashes, guys. And that's the way that it will always be. There will be dips. There will be drawbacks. There will be maybe even deep recessions. Let's hope not. But just mathematically, it will happen to you in your retirement days, and even quite simply, it could happen next year. So why are you sitting there putting your head in the sand and not doing anything about it? Just because it's going up right now does not mean tomorrow, we're not guaranteed anything tomorrow, that it's not going to happen. So hedge against that. So if it does, you can sleep well at night. You're not up at midnight looking at the stock market. Come on.
Or, I'm telling you, the big one is, I'll bet you, Derek, if companies looked at productivity through the day, right up between 2:30 and 3 Central when the market closes, I'll bet you productivity is totally off because people are just panicked looking at their phone, watching the market close. Don't you think?
Well, I'll tell you, guys, you may be a day trader out there listening to me right now, and that may be your job, and you may be quite good at it, but that's your job. If day trading is not your job, stop thinking you're a day trader, because to trade and do active stock market, I mean, that's what we get paid for. I do it 80 hours a week. So you can't sit there at, like you said, 2:30 and get on and be like, okay, I'm going to make a trade real quick and I'm going to make some money and everything. You will fail miserably, guys, because you don't have the time and resources and analytics to be very successful at it. What you did before 2022 and everything, because I've talked to several that did it themselves and everything, and right now they're having a ton of trouble. They're losing a lot of money because, once again, what they did 5 years ago, of course, everybody was making money. It was easy. You could log in for 30 minutes and make some trades and make some money and everything. It's not going to be like that in 2024 and 2025, guys.
But, Derek, I don't think you have to do that. People come to see us. We have a strategy where you participate with the upside of the market but do not have downside risk. You don't have to ride that roller coaster.
So, yeah, everybody, if you want to give me 2 hours of your time, let's sit down together, or you could give your boss 2 more years of your life.
The Fed recently passed again on cutting interest rates, but Bleakley.com's Peter Bookvar says a cut in September would fit nicely into its game plan.
They don't want to be caught stuck having to slash rates. They don't want to have to be caught spiking rates, which was their experience over the past 4 years. They want to be sort of in control of this conversation. But at the back of Powell's mind is, yes, I'm going to give you some rate cuts, but I may not give you the amount that you want because I'm still worried about inflation. Yes, inflation's in the 2 range. I'm very happy about that. But my concern is that I lose control of this credibility that I've worked so hard to get back.
All right, so here's the deal. I think we've all kind of had our fingers crossed, hoping the Fed's going to make some moves, especially after we saw that little dip a few weeks ago, but they haven't. So bottom line is, have you had clients take advantage of these high interest rates on the savings side? And what's the whole deal with that? How can we do that?
Yeah, I mean, absolutely. This is the first time in 20 years you could get, 4 or 5% on a CD in your savings account. So even, money markets are paying, something. Because, before 2 years ago, guys, you couldn't get a 0.1%, 0.5%, maybe 1% if you're really lucky on a CD.
The crazy thing is the people that have come to see us in these last few months have really taken advantage of this rise in interest rate. We've had so many clients come see us, and they've gotten the majority of their money in a conservative strategy where they can't lose it. But the great thing is we've had huge opportunities for gains because of that. We're seeing all the companies right now really starting to lower their caps, their spreads, their participations because they're getting ready for interest rates to come down. And I think now is a really great time to take advantage. If you're 59 and a half and you have money in your 401k, or you may have some old retirement accounts out there, you really ought to sit down and come see us because we could really show you how to capture that money to use for the rest of your life.
Yeah, and that's kind of why we're not typical retirement planners and everything, Steve, is we are very holistic. We look at everything that you have, including your bank rates. We want you to get the best possible bank savings rates on those funds that you have. So Tiffany in her office, she surveys all the banks around town once a month, and goes for Austin, Dallas, everywhere, and it provides us with a sheet of those rates. So when I'm in meetings with people, we can make sure their bank savings are doing as much as possible for them. And we also have a lot of great fixed annuities that do fantastic right now. And those are the kind of things that start to be interest rate sensitive, like you said, Steve, that we're already seeing them hedge against that. They know the Fed's going to start cutting the rates, so they're going to hedge against that and protect themselves where they're not stuck paying way over market on their interest rates.
Well, Derek, we had a lady come see us that had about $1.5 million in CDs, and she sees the writing on the wall. Those rates are going to go back down. And so she strategically, as that money is coming due, is moving it to our firm so that she can have upside potential without downside risk, but most of all, really keep up with inflation. She wanted an inflation-proof strategy, and that's what we offer so often.
I ran across an article that talked about the benefits of annuities, but not just for the client, but also for the financial advisor. It said annuities are really good at generating guaranteed income. We all love that. And they provide a structured way for advisors to approach that challenge with their clients. Yet you still have a lot of advisors out there that do not offer annuities. Why do you think that is?
Honestly, I think a lot of times it boils down to the advisors not properly educated, or they haven't gotten the real benefits for annuities. A lot of that we see is maybe they started in the industry in the 80s and 90s, and there weren't a lot of great annuities out back then. And then they just kind of put them off to the side. And during this time, too, keep in mind, everybody, that the market was just exploding. It was going up and up and up and up. Up until 2008, there wasn't a big drawback. So if you're an advisor, you weren't looking for alternative strategies or anything, right? Just do the typical 60-40 portfolio, everybody. We'll put 60% in the stocks, 40% in the bonds. It's super easy, and it's going to make you money. And they were right. It made you money, and it went along and did exactly what it was designed to do. But the volatility and changes in interest rates, inflation, all those things are really killing the 60-40 portfolio right now. And now all of a sudden, in fact, we had a different advisor in Lubbock that called our office and was like, hey, I know you've been doing annuities for a long time and everything. Can you kind of, give me a heads up and what are they good for and everything? because, for another advisor, and we're friends and things like that. It's not like it's huge competition kind of thing between us. But for another advisor to call and ask for advice, that's a big deal. That shows that, hey, the market is changing the last couple of years, and you have to get on board and be more holistic. And advisors that aren't incorporating annuities and different alternative investments and strategies, you're a dinosaur, guys. You got to do something different. We have to maximize our clients' benefit as much as possible. So that has to be, I'll tell any advisor, listen, you got to be open to new ideas and new strategies. And if it's right for the client, it doesn't matter. It doesn't matter if it's good, if you like it or not or anything. If it's right for the client, then it's right for
That's what matters.
What do you think, Steve? What's the drawback on these annuities that, advisors are sitting on their hands?
Well, I think a lot of advisors had so many clients come see them with variable annuities, and invariably the fees are so high, the clients have lost so much money, and there's such a downside, they've not educated themselves on fixed indexed annuities. For the past 35 years, we've been helping our clients pick some fantastic annuities, and I got to tell you, looking out there, there's some horrible ones. People bring annuities in, and we're just shocked. So I think what's interesting, Jess and Derek, is that people all the time call us and they say, I have an annuity, it's got huge fees, or I've lost so much money. Well, they bought the wrong kind of annuity. So I think what's really important is to call us, let us send you a secure link. Why don't you send us your statement, and let's really sit down and see what kind of annuity, what you bought it for, what's it doing, what are the fees, how's the company rated, what's the safety? What are the good things about it, and what are the horrible things about it? And then, we've helped so many people move into a new annuity contract that's really a lot better. And, so many people say, wait a minute, I have this huge income when I retire or 5 years down the road with my variable annuity. Invariably, we can get you higher income in one of our contracts. So, it's just comparing apples to apples, not apples to oranges, Derek.
Well, you know what I always find hilarious is that if you ask 10 people or you ask 1,000 people, 90% of them, if you ask, hey, how would you like a pension in retirement? They'll tell you, absolutely. I would love to have a pension. But, Derek, nobody does that anymore. Nobody offers that anymore. And when you say, okay, well, a pension's an annuity, so we can set up a pension-like device for you. And they're like, wow, I had no idea that that's what a pension was. And it's like all of a sudden the light bulb goes off, and it's like, oh, wow, guaranteed income for life? That's a pension.
That's a big deal.
You say pension, everybody's like, oh, yeah. You say annuity, and it's like, I don't know about that. Yeah, so it's fantastic when I kind of shed light on that and get people involved in the numbers and everything and how to you can create your own type of pension.
Derek, that's so important right there. If you're getting ready to take a pension from your employer, you need to sit down with us, and we can show you how you can take control of the money. Most of the time have a higher income than you ever would have, plus you have options, plus you have flexibility. That's what matters. In retirement, it's all about options and flexibility, and that's what at Hoyle Financial we really try to create for our clients.
Yeah, so if you have an old annuity out there or you want to create your own type of pension, give us a call today. We'll do an annuity x-ray. We'll look at your portfolio, look at your old annuity, and see, hey, how can I create more income than what I can create currently for myself? And quite frankly, right, guys, inflation's killing us. You need more income. So give us a call today. I'm going to say the first 5 callers, call in for annuity x-ray here. Let's see if it's a good fit, and we can create that kind of income that you can build throughout the years or just take right away to really boost your income to combat all these high grocery prices, everybody.
The 3 key ingredients to a successful retirement: income, and then you guessed it, income. An annuity could be a fit for you. Again, you can always get more details at the website as well at retiretexasstyle.com. Another sort of, guaranteed income that a lot of folks we put in our back pocket and we say, well, it's going to be there when we retire is Social Security. There's a recent survey that asked retirees and pre-retirees if they understand Social Security. Over half said yes, they do, but ask their advisors, and only about 10% of their clients really understand the ins and outs there. So would you agree with this? And what is it about Social Security that makes it so hard to understand?
I think it's lack of transparency, honestly, with the Social Security Administration is the first thing. Is they send out these letters and they're very convoluted. One of the things they say is now I guess it's been 3 or 4 years they start throwing out if Social Security goes down, this is what it could impact for you, which is good, but they put it on like the 4th back page. It's like once again, lack of transparency. If you're going to get your Social Security cut by half in 10 years, wouldn't you want that on the front page, right, everybody? So, that's just kind of a side thought. But, yeah, so when to take Social Security, they give you these options from 62 to 70, show you the increases, but they don't tell you, too, if you stop working, that changes it. If you get less pay or more pay, it changes. All that stuff you have to research and do on your own, and they're not going to tell you. And you have to reach out to somebody such as myself that's well-versed in Social Security to help you out with that. Because otherwise you call them or you just sign up online and you get what you get and you don't throw a fit, right? But that we see a lot of times that people take it way too early, at 62 because they just, hey, more money, this is better. And sometimes that's good depending on how long you're going to live, quite frankly, right? Or also what you do with the money. The number one thing I see a lot is that people continue to work. They take it early. 2 things happen. They get taxed badly on it. And they also, the clawback hits them, and they also just blow it. They just buy a boat and stuff like that. And it's like, there's a lot of different strategies for Social Security, but we got to find the right one for you. And that takes time to sit down with you and really see, okay, what's the best strategy for you to take advantage of Social Security? Because if you're going to reap 50% more benefit by waiting another year or two, especially if you continue to work and things like that, finding alternatives to do with the funds is important too. Steve, how many strategies do we utilize for Social Security, right? 15?
So many, and the numbers never lie. We can look at all different ages for you. There's so many different ways to take it. But Derek, if you take it at 62, just remember, you're going to miss out on that 8% roll-up each and every year all the way to age 70. Even 3 months later makes a huge difference. That's what it's about. You really have time on your side. And so often we show people, let's use a different bucket of money and turn that on at 62 and let your Social Security roll up all the way to 67, for example, if that's your full retirement age. But, with inflation, you really can use that increase in Social Security.
If you'd like to sit down with Steve and Derek or a member of the Hoyle Financial Group, visit retiretexasstyle.com.
Investment advice offered through Hoyle Wealth Management, a Texas-registered investment advisor able to provide investment advice in states where it's registered, exempt, or excluded from registration. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of loss, including possible loss of principal. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here. Content provided is obtained from sources believed to be reliable but cannot be guaranteed as to its accuracy or completeness. By contacting us, you may be provided with information about insurance products, including annuities offered through Steve Hoyle, Texas Insurance License 716036. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Steve Hoyle is not licensed in all 50 states. To find out if Steve Hoyle is licensed in your state, please call 806-371-9473.